Make sure you guys get your 5 stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Literally free money. Link down below. And now let's talk about some stocks, earnings, the markets, what the heck is going on today, which, mind you, today is President's Day. The markets are closed, but the futures market's open, guys. So we're going to break down a bunch in this video. So hit the like button, subscribe, let me know your thoughts. As always, I love knowing your thoughts. Drop me some comments down below. And now let's get into it. So it's currently 10:36 a.m. on the East Coast. And like I said, today's President's Day. The stock market is closed, but the futures market is showing red. It's showing red right now, guys. The S&P futures are down 0.5%, down over 22 points right now. We have the Dow futures. Let's see. What are the Dow? Dow's down 0.3%. You guys can see that right here. And we have the Russell futures down about 0.5% as the NASDAQ futures are getting hit the most. NASDAQ 100 index futures, these are down about 1%. So pretty much over the weekend, and I did say this on Friday, not to toot my own horn, but I did mention this. I figured over the long weekend, we were going to get fear. We were going to get more uncertainty around Ukraine, Russia. The Olympics ended yesterday, the 20th, on Sunday, right? So that could mean now Russia's getting ready to invade now that the Olympics are over. You know, that's a theory. So I knew going into this long weekend there was going to be something, some sort of fear, and that is what we're getting. And that is why the markets are going down. And I talk about this all the time, how I don't watch mainstream media, I mean pretty much ever, but sometimes I do just glance in to see what they're talking about, both Fox and CNN, you know, both sides of the aisle. And for the most part, all I'm seeing is things about Russia and Ukraine at this point. So, I mean, it's being pumped nonstop, a lot of fear, and that's why the futures are moving down. If you guys see my arrow here, you guys see, if I zoom in, this big gap down right here, that occurred as the futures markets opened yesterday on the 20th. We saw a gap down on the NASDAQ futures down to about 1380 or 13,800 rather. We actually took the lows out from last week with that move down. Then the futures saw a bit of a relief rally, I believe, as we got some news out of Biden or something with Russia. We're not going to get into that. I'm sure you guys have been getting hit like crazy. And then we saw the big dump again, and we took the lows out again. So we're hitting new, fresh lows on these futures when it comes to the NASDAQ futures and the S&P futures. That's what's going on. And again, I'm not trying to toot my own horn, but we did call this out. We understood how there was probably going to be something over the weekend. And now we're getting fear, and that's why the futures are moving down, and we're probably going to start the week off red by the looks of it, unless we get some big turnaround throughout today into the morning tomorrow, which, I mean, that's possible as well. Anything, literally anything could happen right now. So a little bit about Russia, Ukraine, nothing much. I mean, you guys are getting bombarded, but the U.S. continues to see Russia making moves in the field that are consistent with preparations to invade Ukraine. And that actually came from two U.S. officials, I believe, earlier today on Monday. And one of the U.S. officials familiar with the latest intelligence says military preps continue unabated. There has been no slowdown. And like I said, Olympics are now over. Maybe they're getting ready, or maybe it's not. Maybe this is just a bluff. Maybe they're not getting ready to invade. Nobody knows what's happening. That's why it's uncertain. So with that out of the way, futures are down. You guys know the markets have been downtrending in general. And, no need to talk about that at this point. With that out of the way, let's get into some stocks, because this week we have a lot of companies reporting. Nothing in terms of big tech. Well, I guess we do have one big tech name out of China, Alibaba, which I personally own. We'll talk about that later in this video. They are reporting, but other than that, nothing too crazy. I mean, I guess you can say Etsy is a bigger tech company, but other than those two, nothing crazy. And number one, we have Home Depot, ticker symbol HD. They report on, let's see here, 22nd. So they report tomorrow in the morning, Tuesday morning at 8 a.m. Central Standard Time. And look at this chart, guys. This chart does not look good for the bulls whatsoever. We're seeing a head and shoulders. That's number one. We have the left shoulder, the head, the right shoulder. We got rejected at the neckline. This is literally a textbook head and shoulders, guys. Look at this. The neckline is right at 375. That's where the left shoulder failed. And now the right shoulder's failing. So that's a textbook head and shoulder. And now we're selling off down to about 345, which I believe if we fall under this point, which you guys can see 345 was the low from back in the end of January, about a month ago. If we take 345 out, I'm going to put my alert. This is going to make a lower high, or rather a lower low. And we're probably going to be going down to complete that right shoulder. And mind you, like I said, we have earnings tomorrow. If earnings tomorrow are good, this could easily run back up to, let's say, 360 to 365. Maybe it slowly fills the gap back to 370. Maybe to retest that neckline, maybe the 180 SMA. That's if earnings do well. Or if earnings are good, right? But if earnings are not good, let's say we have a miss on EPS, revenue, guidance is out of whack, this could easily take 345 out, and we could go down to 320, 325 in no time, very quickly. And that right shoulder, that's roughly where it's going to complete, 320, 325, 330. So I'm watching this closely. This could really be a short opportunity, or it could be a bounce back depending on earnings. So we're watching out for Home Depot. We're also looking at Teledoc, which is one of those pandemic stocks. This one's been destroyed. You guys can see on the 3-year chart, it was a $300 stock just a year ago. That is just unbelievable. Just 1 year ago, this stock was $300, and now it is sitting at $64. That means it is down about 80% from those all-time highs. And to be honest, I'm not going to sugarcoat it. I'm not looking to trade. Maybe I'll trade Teledoc. That's different. But as a long-term investment, I'm not looking at Teledoc really at this point, considering we're moving out of the pandemic. Sure, Teledoc might be it might be a great company in 5-10 years from now, but for me, I want to see what it does in this post-pandemic era. Is it going to free fall, maybe find a new fair value at $20 a share? Is it going to just find, maybe it's going to consolidate at about 60, 80, $100 a share? It's kind of in free fall mode at this point, so we don't know. And for that reason, I'm just going to give it a couple of quarters. I want to watch it and see what it does. Do earnings improve, revenue improve, or is it going to suffer from the post-pandemic, I don't want to say crash, but a lot of these stocks have been going down. Their revenues aren't looking as great as they were. And is it going to suffer? Is it going to survive? That's kind of what I'm looking for. So Teledoc reports earnings tomorrow after market hours, Tuesday after market hours. We also have Lowe's tomorrow, I believe. Let me double check that. Actually, in 2 days. On Wednesday in the morning, we have Lowe's. And this is also looking like a head and shoulders. If you guys take a look at it, we have the left shoulder right here. We got the head right here. And then we have the right shoulder forming right here with the neckline at about $240 a share. And you guys can see 240 is where we failed back in November. And we just got rejected at 240 about a month ago. Not even 3 weeks ago, we got rejected. So at this point, like Home Depot, Lowe's is looking at a big support level, $220 a share. If we take that point out, this could be in free fall. It could be a great short opportunity, but that's if we break 220. Like I said, I'm going to put my alert right now. Mark is at or below $220 a share. If that point breaks, right shoulder probably completes anywhere from 200 to 205. So keep your eyes on Lowe's. That could be an interesting one. eBay is also this week, ticker symbol EBAY. This stock has been getting destroyed, massacred. I mean, this was $81 a share back in the end of October. Now it just hit 54, so it is down 33%. And they have earnings, let me see here, probably on Wednesday. Yeah, Wednesday they report after market hours, and this one just hit a fresh low, $54 here on the 4-hour chart. We took out the previous low, which was $56. So watch this one tomorrow, guys, and Wednesday before earnings. If this sells off even more into earnings, I mean, how beaten down is it going to get? We have seen big tech names, bigger companies in general report and then crash 20%. So I'm not saying it can't do that, but if it's down so much heading into earnings, their earnings have to be so bad for it to go down even more. And if they surprise, this could easily snap back. So that's kind of what I'm watching for on eBay. Do we get a snapback on decent earnings, or do we just get a free fall like what we saw with Facebook, PayPal? I hope not. I hope not in terms of eBay. Hopefully we get a snapback. But like you guys know, the markets don't really care about you or your feelings. They're going to do what they want to do, and we have to be prepared for anything. So eBay, that's this week. We also have Alibaba, which I said earlier in this video. That's a big tech giant in China. I own this one. I'm down on this one. I think my average cost as a long-term investment is about $150 a share, something like that. This is one that I was buying at $180. I think I started buying, no joke, at like $204, low 200s. And this is one that I've averaged down on, like I said, $180. Bought a lot of 140s, 150s, 120s, literally all across the board down. I bought, and now my average, like I said, is about $150 a share. So Alibaba is one that I'm riding with for the long term. It's gotten destroyed in the short term, which I'm fine with, considering, again, I'm looking at this from a 5-year plus perspective, and they report earnings on the 24th, pre-market. So what is that? On Thursday, they report. This is one that I'm going to be tuning in very heavily to because I have it. It's a position. It's not a big position. It's more of a I don't want to say completely speculative, but there is a bit of risk to it, added risk, considering it's a Chinese company. But it's a smaller position, so I'm not. If I lose it all, whatever. It's not the end of the world. But if I do make a good 3 to 5x, which I believe I could, that's going to be nice, right? That's going to be nice. So Alibaba, I'm watching it. Some resistance points coming up. We have $140 a share. That was the point where we failed twice in January. So if we go to 140, we break that. The next gap could be up to 155. So keep your eyes on that on the upside. We also have NCLH this week, Norwegian Cruise Line. This is one that has slowly been trying to reverse. If you guys take a look at the price action since the beginning of December, so what is that? About two and a half, almost 3 months. It's slowly been trying to reverse. You guys can see if I get the channel tool out. Maybe we have a clean channel. Let's see here. Yeah, look at that. Pretty decent channel. But we got to start breaking mid-20s. That's a sticking point if we go back to the 4-hour chart. Well, I guess this is the 4-hour chart, but if we zoom back out, you guys can see we're still, even though we're trying to reverse, we're still in an overall directional downtrend. So we got to start breaking back above mid-20s. At that point, 28 could be next, and if 28, 29 breaks into the 30s, that's where a real reversal could occur. But we're pretty far from that, so we're not jumping the gun on this one. We're only at $21 a share, guys. So NCLH, they report on Thursday, pre-market. Watch out for it. That's going to be a good one. Six Flags is another one, which I forgot the ticker on this one. Let's see if we could find it here together. I think it's. Is it just SIX? Yeah, it literally is just SIX. Perfect. Six Flags reports this week. Let me take a look here on the 24th pre-market. So that's on Thursday. A lot of these companies are reporting on Thursday, guys. So what we're noticing on this Six Flags chart is it's trading in a tight window. I guess not really a tight window, but it's between $48, $47, $48 as resistance, and we have support around $35. And that's where it's been trading pretty religiously over the past couple of months. You guys can see we failed at $48 once, twice, 3 times, and we failed breaking under, or actually, I mean, we held 35 once, twice, 3, 4, 5, 6 times. So we're trading in this window. We're more towards $47, $48 right now as we're trading at $45 a share. So if I zoom out, let's see on this 3-year chart what we're looking at. Oh, wow, look at that. The channel's even more prevalent on this 3-year chart. Look at that. It looks like we got to break $48, guys. If we break 48 above 50, this could go straight to the high 50s. No joke. $60 is the next main resistance. So this company reports, did I say on Thursday? Let me double check. Yeah, Thursday pre-market. So I'm going to be playing this if it breaks 48.50. If not, this could easily go back down to $35, $40, as the chart clearly shows it can do. It has been doing over the past couple of months. So the next one here is Square, also known as Block. They just changed their name recently, guys, which I think it's a pretty good name change. I mentioned that in the Square video I made a couple weeks ago. It makes sense to me that they changed their name to Block. But overall, this stock has been getting destroyed. I mean, I don't even know what to say. The stock's down 70%, guys. And just Friday, it went down 6%. And it was almost, I think it was above $300 a share at one point. Actually, no, it says here 289 is the all-time high. So from 289 to 96, it is down 65%. And I remember I made a video probably almost 2 years ago at this point, talking about how Square, well, I guess it was about a year and a half ago, I made a video talking about how I regret not buying Square during the pandemic crash. Well, the funny thing is, we're getting to those levels again right now. I mean, look, before the pandemic, Square was about $85, $90 a share on the higher end. On the lower end, it was around $60 to $70, and it crashed all the way to $30. Now we're at 97. If they report terrible earnings, which I'm kind of hoping for, this might be going down to $70, $80, which is literally where we were at the beginning of the March 2020 crash. And if it got even worse, if it got down to $50, $60, I'm going to be able to buy this stock, not even again, but to initiate a position, because I missed my chance 2 years ago, a year and a half ago, when it went from $30 to $290. And that goes to show patience is very crucial. I could have easily FOMO'd into Square when it was at $200 because I missed my $50 entry, but I said, nope, I'm just going to wait. If Square ever somehow crashes again, I'm just going to get in it at that point. And that's what we're seeing right now. Square is crashing again. It's down 70%. If it comes back down another, and honestly, I'm not FOMOing here at $100 either, but if it comes back down 20, 30% more from where it is here, that is when I'm going to start initiating a position, and I'll make a video about it at that point. So that's Square. I'm watching Square this week. Coinbase is another one. They report on the 24th, so that's in 3 days. That's on Thursday. And let me see, was Square? I forgot to say this, or maybe I'm just forgetting. Square is on the 24th as well. All these companies, it seems like they're reporting on Thursday. So watch out for Coinbase, guys. This one's under the moving averages. It's been getting crushed. It's been downtrending. And a lot of these growth stocks are. I mean, you guys have seen the chart. Square, Alibaba, eBay. This is all because of the fear of the interest rate hike, economy slowing down, potential recession. A lot of fear right now. Russia, Ukraine, even though that's more of a new thing, that's been hitting these growth stocks a lot. So Coinbase, we're trying to maybe break out of 200. We tried showing some upside a couple of days ago, last week, the week before. It didn't work out. We got to break 220, guys. If Square, or Coinbase rather, my mind's still on Square. That's when you know, guys. If Coinbase breaks 220, that is where we could start seeing some more upside. So watch out for that one this week. Etsy's another one, which I hinted at in the beginning of this video. This stock is down a whopping 60% over the past couple of months, well into a bear market. They report earnings probably on Thursday. Yep, on Thursday. After market hours is when we get Etsy, and this is one that I've never really considered owning. I would trade it for sure as a short-term play, but as a long-term investment, I've never really sat down, done the due diligence to consider it. But who knows? Maybe under 100, this one could be interesting. And you guys can see the chart here doesn't look that bad. Yes, we are under the 50 moving average, which we tanked under that, which was at about $200. Yes, we're under that. But we are now holding the 180 moving average, which is at about $120 a share. And you guys can see the past 3 years, that point has held multiple times. And if I pop the max chart up, let's see here. Yeah, this trend looks pretty good. So who knows? Maybe buyers around $120, $110, $100. Maybe they start stepping in here on Etsy. And the last one for today, I just realized we talked about a bunch of stocks in this video. It's Foot Locker. FL, guys. Foot Locker is one that, fun fact, I used to own about 2 years ago. I think I bought it, and then I've since sold out of it. And now this is another one that I might be able to get an entry point on, kind of like Square, although Square, I never owned it. Foot Locker, I did own. I bought this, I think, I think my average was like, I forget, to be honest, guys. Maybe low 30s, something like that. I started buying at 25, 30, bought more at probably 38, 40 maybe. Actually, no, I don't think that high. Maybe $35. And I sold out of it. It ran up a ton more, like that. That always happens, right? Stocks go up more when you sell out of them. It's just the name of the game. And now it's coming back down. And if this thing starts dumping low 30s, mid 30s, under 30 especially, I might consider, buying this one back. We have earnings coming up on Friday before the market, so that is in 4 days from now. So there probably is going to be some volatility heading into that, earnings call for Foot Locker, and it's beaten down a lot, and I'm not sure why. Honestly, I'm not sure why. Every time I go to a Foot Locker, and I know I'm in it's just one little part of the U.S., but every time I go, it's packed, and now a lot of people are out and shopping and out and about. So I feel like this company, if it reports a couple good quarters, which I think it probably will, I could be wrong, but just from my research, I've done research in the past on Foot Locker, guys. If they do well, give it a couple quarters, this could easily be reversing back towards 50, maybe even higher. So that's pretty much it for today. Let's loop back and see what the futures are doing. Let me know your thoughts down below in the comments, guys. Hit the like button and subscribe. Futures are down even more. Now we have the S&P down 0.75%. We have the NASDAQ futures down 1.3. We have the Russell down 0.9. And we have the Dow down about 0.5%. So these are considerably lower from where they were when we started this video. So I'm probably going to make another video later on tonight, guys. Again, it's only about 11 a.m. and I don't have much to do today. I might as well make some videos. So that's what I'm going to be doing. Hope you guys enjoyed this video. If you did, again, hit the like button, subscribe. Let me know your thoughts in the comments. Make sure to join my Patreon if you want all my real-time buys, sells, call-outs, morning update videos, plus more. That's linked down below. Or you guys can go to StockSurfest.com/Patreon. Make sure to also get your free money, literally free money, guys, from Moo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Free money, link down below. I'll catch you guys later. Peace out.